Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for January 5th, 2017. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Really not a whole lot going on with regards to great clarity and overall direction and a swing setup, those types of things. We're in the middle of a range. We continue to chop back and forth above and below it, but we really haven't done a whole lot here to start the year. We had the Fed minutes that came out yesterday afternoon. We have, now that that's out of the way, we could get some movement. We also have crude oil inventories later on today, 10 a.m. Central Time. So that's going to be something to watch out for. Additionally, we have non-farm payrolls tomorrow pre-market before we head into the weekend. So those are a few things that could provide a little bit of a catalyst. I think any edge will likely be a fade attempt, and any pullback is likely a buying opportunity. So if this thing were to pull back at some point, we'd be looking to pick it up and buy it for a continued squeeze to new highs. This thing continues to remain bullish, but once we do get a fresh test at highs, it's important to continue to watch that previous high here at 2273. Any failure to hold above that high could signal weakness and a move back across the range. So that's going to be something here to watch out for. Until then, swing basis, we're still pushing higher, but not a great entry point right now. We do have this 22.57.5, which continues to be a key level. That's an area where bulls are trying to keep bid for a shot at squeezing higher. So that's a level to watch as a pivot today. Failure to hold that level would imply a return back toward 2240. So that's what we can look at here in the intraday time frame. Bringing this over, you'll see again the previous session's close price right here, 2264, offered above it, offered on a retest, offered again. So right now we have clearly a down moving market at the moment. This thing could come all the way back into the LVN 2257. That's going to be a zone right here where bulls want to defend for a shot at 68s. Failure to hold 57s could auction this thing all the way back toward 2243. But right now, the implication is that any pullback could still be a buying opportunity, so we'll keep an eye on this. Watch 2257. Now let's take a look at crude oil. Here's crude oil, higher time frame chart. One thing important about crude oil is that after the major rejection on these highs, it was significant. And one thing we were watching for in the trading room was how was price going to respond to 53s. I mentioned that we appeared to be forming digestion here, which could signal a push higher. And I mentioned that if we broke above 53s, look for a continuation back toward 54.80 and perhaps a continuation toward 56. And so far, we ended the day well above 53s, and here we're already seeing a defense of that zone after test from above. Now, one level that's very important here is the previous month's close price. That's the previous year's close as well. That's a zone that could get some fight here. But overall, this implies more squeeze to the upside. So buying dips could be a great idea here over the next few days. But any failure to hold 53 would rotate this right back into key level support, 51.67, 51.71, 52 evens. Very, very thick area of support. So I'm surprised we didn't get it on a test on this recent push, but we'll keep an eye on 53s here. As long as that remains intact, we could continue higher. Failure to hold it would signal a retest of this zone. All right, let's take a look at the intraday time frame. On an intraday basis, right now we're kind of pushing higher. We've obviously seen some very nice moves out of crude oil here. First on the way down from this tightly coiled range, big sell-off. Then we had basically a two-day range develop down here. This is when I mentioned we had some significant fuel that was building up, and a break above 53s could spark a move back toward 54.80, right about here, and then perhaps a continuation even higher. So right now we're already on the way higher. You see 53s has been an area where bulls have wanted to defend. Any rotation into that zone still should be considered a buying opportunity. Right now we do have a clean market structure up. So we have this market structure, and breaking it up. So the next area to defend is going to be about 53.40, which is about VWAP. that would be an opportunity to bring it toward 54, perhaps higher. But right now, the clean market structure could keep it in here before we continue upwards. So as long as price remains above 53.40 short term, we should be still in a bullish state. All right, taking a look here at the gold futures chart. There it is. You can see we have an uptrending market, generally speaking. We have hit 1180 for all intents and purposes. That's very important. And if you take a look at the higher time frame, this is something we talked about before. I mentioned that I hesitate being bullish, too bullish on gold because we've been quite bearish here for some time. But one thing that does stand out is that after price broke above 1145s on this day right here, holding that level was very important and suggested a move into 1180. Today's high is 1179.90. So we reached that level. That's what I talked about pre-market yesterday. I mentioned pre-market, any pullbacks likely to buy an opportunity until we hit 1180. But once we hit 1180, bears have been in control this entire time. That's been a big time area of support into 1200 as well. And price was not able to hold that support, thus we broke downward. Now we're retesting that area. This is a thick area of resistance between 1180 and 1200. It's going to take a whole lot to get through that zone. If price can push back above 1200, there could be a move back toward the HVN at 1263, followed by a continuation into CVPOC at 1321. But that's well and far away right now, as primarily speaking, bears are in control, and this is going to be seen as an area where bears want to defend for a shot lower. If that pullback does occur, bulls are still alive for a shot at creating a higher low, and that would be the next wave that would confirm the continuation higher. All right, let's take a look here at the NQ. To wrap this up, we have the NQ. Here's the range, 4,900. I mentioned that was the important level to watch, and price broke below it, held 48.40, and broke back above 4,900. So this is pretty important here. We're forming this range up here. We're generally above the key range from the election night impulse move, and that would imply acceptance above that zone. So clearly 48.40 is an area to watch. That's where bulls are trying to keep bid for a shot at continuing higher. Any failure to hold 48.40 would suggest a rotation back toward 4,700 and the lower FOMC level. All right, looking at this at an intraday time frame here. Here's the intraday. Basically, this one right here shows that price has generally been up, but yesterday we really didn't get a whole lot of traction after that push higher. We just kind of really got stuck in the mud up there around 49.30. We're clearly above 4,900 right now. I would say a retest back this way could provide an opportunity for bulls to defend and squeeze. But right now, not a whole lot to really go on. Very, very light participation in overnight trading. Not a whole lot of range to go on. You're seeing bears offering the previous session's close, so any price here likely to be defended on short-term rotations. Any push downward also likely to be defended right now. So it could be a fade the edges type of day as this thing continues to build out. Not a whole lot to really go on an intraday basis, but as long as price remains above 4,900, the implication is that pullbacks could be buying opportunities for a continuation to highs. New highs would put you somewhere into 49.60 and beyond. All right, that's it for now. Let's see how this plays out heading into the rest of the session. Good luck and trade well.